Alan Ruskin of Deutsche Bank. Good evening to you.
Good evening, Tom.
I want to bring up a chart right away because this is what did not happen. The equity markets went up, and you can see here, Alan, looking down here, the bill comes due. The Greece-Germany spread, the story to me, yeah, it came a little bit, but back to September 15th. Nothing's really happened on spreads. Forget about the U.S. equity market. Why did these measurements that pros like you use, why did they not move today?
Well, I think it's still a big question as to whether Greece will actually get through this without defaulting. So, as your guest has suggested, debt to GDP levels of 120% are still not perceived as sustainable in the long haul. The good news, I think, from a potential default going forward, if one is to look at that kind of scenario, is that a large part of the debt is increasingly being held in the public sector hands. So, if Greece were to default in a number of years' time, then at least it wouldn't be a global systemic event. I think the world has moved on really to Italy. I think Italy is really the center of the problem at this point.
Is Italy much larger than the Massachusetts that is Greece, let's call it? Give us a scope and scale there. What are you watching in Italy that is critical as we go into November?
The most important thing, I think, is really just how BTPs actually respond, not just to the package, but when we actually get action from the EFSF, assuming that we get, this dual approach, really, of leverage on the one side through the SBEV, which we don't really know an awful lot about, and the insurance scheme. When we see that in action, do we see yields coming off, and not just the segmentation, really, where it's a two-tier bond market?
You have talked to pros all day. I want you to help our viewers who are not pros. Why do they care about this? Enough of Europe. Tell me about 9% unemployment, 16% underemployment. Why should our viewers across America care about Europe this evening?
Well, it's the usual story of financial contagion, really. So, what happens to financial institutions in Europe will quickly spread to the United States. And as we saw back in 2008, the U.S. was perceived as the center of, or the epicenter of the financial crisis. That very quickly transmitted itself onto Europe. Large losses at financial institutions mean credit crunches. We are already approaching something like a credit crunch in Europe. We're not there yet, but we're on the verge of that, and that kind of weakness very quickly transmits itself across.
The president this evening in his FT op-ed calls Europe a critical anchor. Was that a signal to China to say, yes, this is a critical anchor? Please help Europe and indirectly the United States out.
No, I think the U.S. is a critical anchor unto itself, really. It's still the largest economy by some way, really. It might not have the funds to spend on Europe freely because clearly it's fiscally constrained as well. But I think there's also, as you allude to, a little bit of a message. We need help from everywhere.
I would suggest that this is a message. He writes, 5 people look at this, 20 people look at this op-ed. There is a message there to the Chinese. What message should Europe send to the Chinese?
Well, I think the Europeans can aptly say, look here, you're very heavily invested in the euro. You're very heavily invested in the stability of the euro.
So the headlines, Ruskin says China doubled down?
I hope not. But no, I think clearly they have to show the Chinese that there's something viable here at the end. That, what's the end game here?
You are a macro strategist with a particular interest in the interdependencies of foreign exchange. What does it signal to you that we saw the equity markets move so abruptly today?
Well, I think the U.S. equity market was on the verge of going higher no matter what, really. I think we've seen that the data surprises in the U.S. had moved from...
Good GDP, we'll talk about that later.
Absolutely, yes. Yeah. But the data surprise has shifted from very negative surprises to positive surprises. And the U.S. had skirted with so-called stall speed. We've seen this reacceleration. So I think the U.S. story was saying, look here, if only we could just get Europe and put Europe aside, then equities are going up. And equities in general are very, very cheap in relation to bonds. So the risk premium attached to equities was very, very high and seemed to be based on a rerun of 2008.
A rerun of 2008 brings me to the euro advancing today. Which way are we going to go here? Are Europeans going to buy the rest of the island of Manhattan they didn't buy in 2008? Or are we going to see the consensus opinion the euro comes down and I can afford a cup of coffee in Frankfurt?
Well, I think euro is going to have a hard time getting up to its highs of the year, just above 149. So I think that's the ultimate limit. And actually, if you're talking to foreign exchange people, there are ways of structuring a foreign exchange view that suggests the euro stays between 120 and 150, and you can make lots of money. If it goes below 150, you start losing. Goes below 120, actually, you can still be all square. So there are ways to structure a trade which has this same kind of range we've just had this year.
What will you look for tomorrow morning? It's been an exhausting day. We do it again tomorrow. What will you watch in the markets as Europe opens tomorrow?
My first port of call would certainly be the Italian bond market, above all else. We could look at the European bond markets in general. The CDS market has been moving in a very volatile fashion.
To say the least.
Yes, it's somewhat less reliable, but I'd certainly be looking at that. And of course, bank stocks in Europe have had a fantastic run today, and just see if there's actual follow-through to that.
Nice shameless plug for Deutsche Bank. Very good. Alan Ruskin, thank you so much. Sarah and I are thrilled you could come by.